Thanks for tuning in again. In this video, I'll talk about NIO's Q3 numbers and expectations towards it and why NIO hasn't reported yet, and stick till the very end where I will be addressing what I think is a not so happy good statement by the CFO of NIO in the last earnings call and why I expect he makes some changes to that. Now this week NIO stock took another beating, closing at only $7.24, so pretty low, and I think lots of it has to do with the increasingly challenging macroeconomics and especially with a lack of liquidity in the markets and quite some turmoil when it comes to bond yields and the US dollar strength. So it's quite volatile still. So these are not good environments for risk assets like NIO stock, but also other risk names that are beaten down generally. But in this video, we'll focus more on the fundamentals of NIO. And there's certainly also a little bit of overhang, some of which we've been discussing in the Patreon group. So I posted a video about my commentary about another rumor has to do with JAC and FAW and a Chinese brand called Red Flag that is possibly going to do something with NIO there. I pointed out my commentary on that in a Patreon only video. So these exclusives are only available to the Patreon community if you're a 10 USD member, and then you're also in the group chat where I continue posting. And so with these rumors, what's about to happen with the JAC factories, no announcement and clarity from the Q3 earnings yet, and therefore also no guidance for Q4, plus question marks whether or not NIO may need some more money in the future. I think that is all creating some overhang over the stock, and the shorts are jumping on that. Now it's 9% of the float is short NIO stock. So additionally to the daily short volume, this is creating this additional overhang and pressure on NIO stock price to the downside, and has the result that NIO is currently priced at a price to sell multiple below 2. That is similar to where it has been priced during the time when it faced bankruptcy. So regarding the topic why they haven't reported Q3 earnings yet, some people may suspect it has something to do with the overhangs that I just mentioned. However, I just think this is possibly quite natural that they're reporting late. This has to do with NIO's fiscal year, which is later than most of the other companies. So for them, they are following their own cycle, and that one is quite late. And additionally, I think for NIO, it's a tactical move. I think they really like to take more time in order to have a better guidance that they can also give to investors, or in other words, to make it easier for them to have an accurate guidance so that they don't guide maybe too high or too low. And on top of that, with all the things up in the air, for example, about the factories, about cost cuts and forming their internal strategy, if the earnings are a bit later, it helps them to get a better earnings call with the analysts and to have better answers prepared to some of the most pressing questions right now. Speaking of the expectations for the Q3 earnings call, here are the analysts' expectations, which is that NIO is about to lose 555 million USD in net income, so a negative net income again, and that should be a smaller net loss than in the previous quarters. And so we should see a narrowing of that. But given NIO's valuation multiples and the stock price performance that I just mentioned, it seems like that the buy side is clearly not buying into this narrative of the sales side analysts, basically. Because if the market would believe that NIO would actually start narrowing down its losses, I think then we should also see that reflected in the share price. And currently, given where it's trading at its lows now, we clearly don't see that, right? Now, speaking of cost savings, NIO has clearly signaled to the market that they are going to take measures. One of them has been the announced layoff that I previously talked in my video, and I've done a NIO layoff napkin case based on some numbers that I found around NIO's average salaries, and I think theoretically they could save north of 300 million annually with cutting 10% of the workforce. Of course, it depends a little bit which department and how high those employer payroll contributions like severance packages, as well as all of the overheads like for pension funds, employment benefits, and all of that sort of things, how much they are contributing to the overall cost. But I do think that this could have some quite significant quarterly savings as well for NIO on top. But the issue here is we won't see them happening in the reported Q3 and also very likely not yet in the Q4 numbers, but gradually throughout 2024. Another way forward to profitability for NIO and lower quarterly net losses would be about the topic of that NIO could acquire its factories by JAC for about $600 million USD. And we've discussed this in the Patreon community. Again, here our member Andrea, he did a little bit of a napkin calculation here and came out roughly at cost savings of 142 million per year that could be saved because simply they don't have to pay fees for JAC anymore. Another member highlighted that Felix Finance did a video about that. To be honest, I'm not sure how he arrived at some of these numbers here when it comes to the income statement, operating income, net profit. These numbers are not NIO numbers in my point of view. So contrary to Felix, I'm not seeing how this factory deal would actually bring NIO itself already into profitability. Instead, what I've done is I have looked into the NIO annual report and looked at what they have been paying to JAC over the years. So that's mapped out here in this little napkin case. And it seems that they are paying on average around 1,300 USD per car produced. So if we are estimating that for 160,000 cars maybe this year, that would cause a fee of around $200 million to JAC. And in 2024, where it could be that once they take over the factory, 306 million US dollars could potentially be saved and would not have to be sent to JAC. Instead, this could contribute to amortize a possible acquisition of these assets worth 600 million. So it would possibly take around 2 years to pay that back, whether or not they take out a loan or take on investors to get that. And so these are some of the cost reductions currently at play that may contribute in 2024, but in my point of view, certainly not to Q3, which is already in the past, and not to Q4 either. And so this is possibly also why the sales side of the analysts are not really buying those huge net income reductions here. And that's possibly why investors or the traders out there, the hedge funds, are more on the wait and see side currently instead of actually seeing those benefits of these cost reductions in the short term. So this is what analysts are expecting. What are my personal expectations? Well, for Q3, I've estimated close to 2.8 billion USD in quarterly sales. That consists of 2.6 or 2.7-ish billion in vehicle revenues based on average sales price of 48,000, so slightly up. We now have the ES8 and a double-digit vehicle margin that NIO has guided for, so I'm taking the lower side here, 10%. And if R&D and SG&A are coming down to 420 million each, then we could land actually quite close to those minus 570-ish net losses here. That's actually quite close to these analyst targets, and that's actually simply driven by a higher vehicle margin. However, of course, there are question marks whether or not these operating expenses are realistic in the way that I'm estimating them here, given the fact that in Q3, NIO has actually almost doubled down on their extensive build out of battery swap stations in comparison to Q2, where they've built around 217 battery swap station. Now it's close to 400, so increase the speed there, and with that, of course, also spending. The problem is you never know how much of that will be built in this current quarter, how much of that will be fluctuating throughout a couple of next months, and so on. And also regarding the R&D cost in general, at some point we may see them peaking simply because of the fact that NIO is now done with developing the 8 models and the NT 2.0 platform, and with the cost cuts announced, as I mentioned before, possibly we will see reductions in some of the compartments like their own battery R&D, the mobile phone business, and maybe on the chips business where they needed additional staff to ramp up this. But now that things are done being developed, they possibly don't need all of that stuff anymore. Similarly to possibly also some of the vehicle engineering, the vehicle testing, some of the third parties that are being used to validate new vehicles and stuff like that. All of that will be gradually coming down I believe, depending a little bit on where they are with the sub-brands, but overall this will have impact on the R&D cost going forward. And so regarding these R&D costs, I think this is where the CFO in the last quarter in the earnings call made a statement that I think was not positively resonated with the analysts, because he basically said regarding the R&D expenses as introduced in last quarters on average, they had R&D investments that will be around 3 billion to 3.5 billion for the year. And I think next year we will keep the R&D investment and activity on a similar level. Well, that is now conflicting with the actualities and realities in which NIO has started to launch certain cost reduction measures and possibly will result actually in a decrease of R&D spend in the next coming quarters, as well as the additional results of, for example, taking over the factory, as well as headcount reductions overall. And so summing up my expectations for the Q3 earnings, I think there is actually a possibility for the expectations to meet of the sell side analysts that are pointed out before. However, the buy side analysts are clearly not buying into that narrative yet. There are more on the expectations that NIO will actually possibly have similar net losses than the last quarter, so no reduction of net losses yet. Otherwise, the stock performance currently should be way different than that, because if we are now getting to a narrowing of the net losses each of the consecutive quarters and getting closer to profitability, then that should clearly also show up in the stock price performance, and it doesn't do so far. My personal expectation for the call and the Q3 earnings, as well as the guidance for the Q4, as well as the management call, is that we get possibly more clarity by the CFO than what we've seen now in the previous quarter, which I think it didn't make much sense and it didn't communicate a clear path towards profitability. I hope the CFO will be doing better this time. And with the little bit of the time lag that they're having towards announcing and conducting the earnings call, they should be hopefully able to do so and have some better answers to the analysts. And then possibly we'll also see a buy-in from the hedge funds and those much more skeptical investors currently on the sidelines. But that, of course, is my personal wishful thinking. Let me know what you think about it and where your expectations are. Thanks for watching, and let's hope the next weeks are getting a little bit better for risk assets in the markets.